everyone, I'm Gurleen. I hope you're doing well. A lot has happened over the course of the week, and in today's video, we'll be discussing the market outlook for the upcoming week, and we'll also focus on the trade plan for Monday, that is April 10th, 2023 for Nifty and Bank Nifty, and a few select stocks wherein good risk to reward opportunities are brewing up. So be sure to stick around till the end of the video, and don't forget to hit the like and subscribe button, and do ring the notification bell so that you never miss an update. Right before we start, the Reserve Bank of India placed its monetary policy delicately and surprised the markets by keeping the interest rates unchanged at 6.5%, so as to balance the input inflation while maintaining its growth target so that it does not punch the consumers and the businesses. Well, that's to keep you updated. So without any further ado, let's take a look at the technical angle, starting with Nifty 50 on the weekly time frame. Here you can see that Nifty has registered the highest weekly closing in the last 5 weeks, and Nifty has been trading within a parallel channel from the top of November 2022. Thereafter, we have seen a lower high and lower low structure in the index, which is a classic sign of a downtrend. Now, you can also see that Nifty tested the lower end of this parallel channel, and it was a harmonic potential reversal zone as well. So from these levels, we have seen a decent recovery in the index. Here, if you also observe that Nifty has tested the upper end of this parallel channel and is hanging at the edge. So you might ask, is it going for a breakout on the upside, or is it the temporary end of this move on the upside? Well, to understand that, let's dig deeper with a multiple time frame analysis. Here we have the daily chart of Nifty 50. Now, as we were discussing on the weekly time frame about the harmonic reversal zone placed at the levels of 16,989, so you can observe how Nifty reversed from this zone, and we saw a lot of volatility around these lows, but it's the way of the markets. Also, if you remember, we've been discussing about this fresh harmonic pattern which got triggered above the level of 17,207. Now, according to this pattern, the targets for Nifty were placed at 17,590 to 17,690. So you can see that the initial target of 17,590 has been achieved, and it seems that there's only a little room left for Nifty on the upside. Also, the maximum downside looks capped at the recent low of 16,828. So what's the way ahead of the markets? Now, moving forward with the hourly time frame. Why I said that there's little room for Nifty on the upside is because here, if you see, it has almost a vertical rise from the lows, and we all know that market never moves in a straight line. So we might see a temporary pause in the trend from this zone of 17,590 to 17,690, as it's a potential reversal zone. So you might as well ask that what are the odds of the upside move getting extended? Well, in that case, the maximum upside that I'll be anticipating in the index will be at the levels of about 17,926. But that's just a possibility for now. Though at the current levels, if you see, if you're looking to build fresh long positions, the risk to reward does not look favorable, and it's time to be on the cautious or the safer front. Now, at this point, what can really happen in the index is that it might consolidate within this range of 17,590 to 17,690, and we might as well see Nifty catching up with these averages placed at the levels of 17,500 and 17,380. So for now, you can consider these moving averages as your immediate supports as well. On the 15-minute time frame, it's rightly said that the trend is your friend until it bends. So as of now, you can see that the index is stable and is also trading above the moving averages. So on a shorter time frame, longs can be strictly trailed with respect to these moving averages, and an additional confirmation of a pause or a breakdown would be below these averages. We have already discussed the support levels for Nifty at 17,500 and 17,380, and the resistance for the index is placed at 17,690 and 17,777. Now let's move to Bank Nifty. On the weekly time frame, you can see that we we have a falling trend line in Bank Nifty, and Bank Nifty has tested this trend line a couple of times in the past, and once again we're at the same junction. Also, there's something really interesting that this falling trend line coincides with the harmonic potential reversal zone on the daily time frame. So is it hinting that we might be in for a pause in Bank Nifty? Let's take a closer look on the daily chart. We've been tracking this harmonic pattern with the breakout of the level of 40,200, and as we've been discussing over the last few videos, Bank Nifty has reclaimed the 41,000 mark and is close to the harmonic target of 41,332, which you can observe here coincides with the falling trend line. In the last trading session, if you see, Bank Nifty registered a long upper wick, which simply means that the bears snapped in towards the end of the day. So moving forward, we can expect a temporary halt in the trend. You might as well ask, what if Bank Nifty continues to show resilience and we break out of this mark of 41,332 on a sustainable basis? Well, in that case, the maximum upside that I will be anticipating will be at the levels of 40,068 followed by 42,268. But that's only a possibility as of now. So let's not preempt or place impulsive bets at the current levels. Also, we're not really on the safe side yet, so you can consider the level of 38,613 as the maximum downside level for now. Now onto the hourly chart, the upside target of 41,332 is almost achieved, and from the current levels, fresh positional longs should consider the risk as we have seen a vertical move, so a consolidation within this range or a pullback towards these moving averages cannot be ruled out over here. So you can take into account the hourly moving averages at the level of 40,891 and 40,595 as the trailing supports. If you've already built long positions, so it's suitable for you to trail them. On the 15 minutes chart, we discussed how Bank Nifty was stuck within this range of 40,802 to 41,071, and I outlined the intraday trading opportunities. So here you can see that it was quite rewarding as Bank Nifty broke out of this upper band of 41,071. 1:1 RR was achieved. Now, if you see that Bank Nifty is trading flat within these moving averages, so what should be your approach going forward? Now, there are two possible case scenarios here. If Bank Nifty holds on to these levels and start inching higher, then the maximum upside looks capped at the levels of about 41,332 to 41,382. On the other hand, if Bank Nifty breaks this level on the downside, then testing the levels of 40,800 looks probable, and only a breakdown below this would open up more downside towards the levels of 40,595. On the larger degree, the support for Bank Nifty is placed at 40,595 and 40,205, whereas the resistance is placed at 41,332 followed by 41,382. Let's also take a quick look at the small cap and mid cap index. Let's start with the small cap. So here you can see that the index reversed from the harmonic potential reversal zone of 9,797, and since then it was trading within a wide range. Now in the last few weeks we saw an aggressive move on the downside, but it's interesting to notice how small cap has managed to recover from the lows. Now the up move looks clearly steep, and in such a case a cool off or a pullback cannot be ruled out. But then for the bulls to have an upper hand, the recent low of 8,492 must remain untouched. Similar story is brewing up in the mid cap. In one of the videos we discussed that amidst the distress on the street, the mid cap was quite stable at this demand zone, and this move on the downside might as well be a shakeout, and here you can see how mid cap has also recovered from the lows. So for this up move to sustain in the mid cap as well, the recent low of 29,200 should not be tested again, or we can also say that this low of 29,200 should remain protected in the mid cap. Now let's move to stocks. Let's start with the update on HDFC Bank. So the long setup in HDFC Bank has been playing out well from this demand zone of 1540. Though I was only expecting a limited upside of about 1632, but then in the last video we also discussed how the harmonic pattern was invalidated and the possibility of an extended move on the upside had opened up. Now we discussed the upside targets of about 1660 to 1676 followed by 1716 on a larger degree. So the initial target targets have been achieved over here, and for those of you who are maybe looking to build fresh positions, now would not really be a good time as the stock has already come a long way. So looking at this trajectory on the upside, chances are that we might as well see a pullback in HDFC Bank, maybe towards these moving averages placed at the levels of 1600 approximately, and that might bring in some good opportunities. Moving to the update on State Bank of India, as State Bank of India reversed from the harmonic potential reversal zone, I was expecting it to test the levels of 534 on a swing basis. And State Bank of India has done just that, and here if you observe closely, it is resisting at the moving averages. So for SBI to inch higher, it must surpass the level of 534. Also on the hourly time frame, if you see, it might be a pullback trading opportunity in this counter. So if SBI holds on to these levels of 524 to 525, it's probable that it can once again test the highs with an invalidation level of about 519. The next one is Bajaj Finance. We discussed the possibility of a double bottom in Bajaj Finance, and you can see that the stock has given a closing above the level of 5900, which validates the pattern. So in the upcoming trading session, it seems that we can see good momentum in this counter, and a probable target of 6170 can be expected initially. Also, as of now, it will be crucial for Bajaj Finance to hold on to this level of 5900 to continue its trajectory on the upside. The last one on the list is Reliance. So Reliance is consolidating within this narrow range of about 50 points, and the major support is placed at the level of 2290. Such narrow range setups are usually followed by an explosive move. So let's outline the possibilities here. So the first one is that if we see a breakout at the level of 2350 in Reliance, then it can test the levels of about 2396, which also happens to be a potential reversal zone. The second one is that if the consolidation goes on, it's likely that Reliance can even test the major support level of 2390. Let's see what the week holds ahead. On that note, it's Gurleen signing off. Until we meet again, have a good time.